This guy just took the commodity warehouse paradigm and applied it to stocks. And that's how SPY was born, the first ever ETF, which is called the SPIDER, which stands for S&P Depository Receipts.
The ticker are so important when it comes to ETFs.
Yes, Bitcoin is a disruptive technology, but hey, so are ETFs. They're actually a powerful combination. And ETFs are just like, they're going to disrupt some of the exchanges for sure.
You think that Wall Street is taking over crypto? Today we are going to discuss ETFs and the role they are playing in digital assets adoption. Do you know what an ETF is? Well, here is a quick introduction. An ETF, or exchange traded fund, is a predefined basket of financial assets that are wrapped into a fund and then are listed onto the exchange so anyone can buy and sell them like an individual stock. ETFs can be structured to track anything from the price of a commodity to a large and diverse collection of securities. Earlier this year, the Security and Exchange Commission in the US approved multiple Spot Bitcoin ETFs that directly track the price of Bitcoin by holding a large amount of Bitcoin, obviously. That was a game-changing event for crypto. The goal of those ETFs is to allow more investors, especially institutions, to invest in Bitcoin without directly owning it. So, I have decided to invite on the show the ETF ex-guru Eric Balchunas, senior ETF analyst for Bloomberg and author of the Institutional ETF Toolbox and the Bogle Effect. Before we dive into today's interview, I'd like to introduce you to our partner, Hive Digital Technologies, a publicly listed company building the next generation data center infrastructure with 100% renewable energy. Hive was the first crypto miner to go public and the first one to have an AI strategy. With over 2,600 Bitcoin on their balance sheet and operations in Canada, Sweden, Iceland, and Paraguay, Hive is fully committed to transforming communities, rebalancing the energy grid, and delivering value to shareholders with a low dilution and cash-focused approach. If you don't know Hive, check them out at hivedigitaltechnologies.com. A couple of other things. Firstly, if you are watching our interview but you are not yet part of our community, please take a moment now to subscribe to our YouTube channel and follow Financial Fox on social media. You will find the links in the description. The bigger our community grows, the bigger Financial Fox gets and more prominent guests I can invite to add maximum value to you, whether you are an investor, founder, or crypto enthusiast. Secondly, please remember that the content on the show is for informational purposes only and not intended as financial advice. Any opinion shared by me or my guests are our own, and you should never act solely on the back of them. As always, do your own research, level up your skills, and be accountable for your decisions. Eric, thank you so much for coming on the show. How are you doing?
Good. How are you? Happy Monday.
Yeah, happy Monday indeed. I miss you in Lugano. I know that you gave a great talk and didn't manage to catch up then, but really glad that you made time today to talk to us.
Yeah, glad to be here. Well, it was a great trip. I've never been there. Very intense crowd and energy. I didn't know many people, but I was sort of the TradFi guy there, kind of representing the ETF world. And I think I made my point. It was good, though. I really enjoyed the venue and the location.
Yeah, it was great because it wasn't just really focused on Theta and Bitfinex. It was really not just the stablecoin market, but also kind of like all the crypto space is kind of evolving. And obviously TradFi now is becoming a player, right? So in this interview, I wanted to ask you, you think that Wall Street is taking over crypto? That's
A little. One quick thing you need to know, though, an ETF is just a vehicle to get the thing. So like you could say is Spotify taking over music? Well, Spotify is just the portal that millions of people use to listen to the music, right? So if you see a bunch of numbers on Spotify that are positive for some artist, it's not like Spotify is one giant thing. it represents millions of people listening to that artist, right? So an ETF, if it has a lot of assets, those assets represent thousands, if not millions of investors. So in a way, is Wall Street taking over? I would say that think about Wall Street as taking over as the intermediary in a way. And I think what they're doing is, ETFs aren't really, if you have a wallet and you're just real into Bitcoin and you are a true believer, the ETF will not be for you. But I do think what ETFs are taking business from are more expensive funds that are out there, international in Canada and elsewhere in the world. Or they can be really expensive. These are all really cheap. They're also taking business from the exchanges, because if you are a person who doesn't want the wallet, you're going to outsource the pain of getting the Bitcoin. Well, exchanges are a way to do that. You buy it on there, they deal with that. But the commissions are pretty high. To trade an ETF is 1 basis point. That's 0.01%. And the expense ratio is like 20 to 30 basis points. So all in, it's almost free. So the ETF, I think, is just a stronger, more powerful, potent intermediary. So if anything, they're going to challenge the exchanges probably, and anyone else who is charging a lot to outsource the painful task of getting Bitcoin for you and giving you exposure. So that's how I would look at it. They're no threat really to the people who have their own wallet. And if anything, ETFs are so widely distributed over every brokerage platform. They're a very popular way to invest that it's probably going to bring more people in. I mean, it has. And so if anything, you're going to have just more people who invest in Bitcoin with you. And the price, it's already up from 25K to 70K-ish since the ETF was filed from BlackRock about 16 months ago. So you've gotten a lot of nice return. I would say ETFs are 100% of that, but they're probably a good chunk of it. So that's how I would look at it.
Okay, I've got some counter argument for that and some kind of concern.
Sure.
But before we do that, give us an overview of the ETFs out there and also the inflows and kind of like volumes.
Yeah, so I'd say there's 11. There's a couple little ancillary ones. Let's just think there's 11 main spot Bitcoin ETFs. Those are the ones that launched in January to all the fanfare, right? It was like a horse race. Those 11 now have around $73 billion, somewhere in there. We'll say 70 billion. They have taken in 24 billion in new flows. So remember, Grayscale converted into an ETF and brought over like 28 billion or something. So Grayscale they started off with a nice chunk of money because of the Grayscale conversion. Then the 10 new ones came and started taking in their own money. So added up, like I said, 70 billion in assets, 24 billion in flows. The 24 billion is important. Let me put that into perspective. So in my opinion, it took gold ETFs like 4.5 years to get 24 billion. So it's fast to get that much in under a year. And we thought they'd do 10 to 15 billion in the first year. So they're already about 10 billion beyond our high bullish case. So it's really good. They've pleasantly surprised, I think, a lot of people. And ETF issuers are BlackRock is leading with IBIT. Fidelity has FBTC. ARK has ARKB. Bitwise has BitB. And then Grayscale launched what's called a mini-me, which is a very cheap version of the same thing. And I think they charge 15 basis points. And they're, I think, climbing fast. They're fifth. And there's a few other issuers like VanEck and Invesco and Wisdom Tree. I might be missing somebody, but that pretty much rounds out the list of issuers sort of in order of assets.
Eric, can I just stop you there? So when we are talking about spot Bitcoin ETFs, just for the listeners that are not so familiar, those ETFs are financial products that track the price of Bitcoin. So it's like buying Bitcoin, but you don't need to own it. So you kind of like buy a product, like buying an individual stock, basically. That's how you get Bitcoin.
Let me get this cures everybody of their confusion over what an ETF actually does. The ETF was invented by a guy who used to run a commodities warehouse. So in the commodities world, there's these warehouses where you store commodities. For example, say you have a bunch of soybean oil. You can go there, put it in a locker with the soybean oil, and they'll give you a receipt. The receipt you can then trade with other people for other commodities, and that way you're not moving merchandise around. And let's say you get a bunch of receipts and you actually want the soybean oil that's, linked to those receipts. You go back to the commodities warehouse and they go to the locker and they give you the soybean oil that's in proportion to those receipts. And so an ETF is simply a receipt to the Bitcoin stored with the custodian. In this case, it's Coinbase. So Coinbase is like the warehouse and it's storing the Bitcoin, and the receipts are what people trade back and forth. So I won't go into much more detail. There are an intermediary called an AP that's an important part of that process, but that should give you an idea of like what you're doing here. This isn't like somebody promising that they have the Bitcoin. It's literally a receipt that connects to a proportionate amount of Bitcoin stored with the custodian. Now, that's how equity ETFs work. That's how bond ETFs work. This guy just took the commodity warehouse paradigm and applied it to stocks. And that's how SPY was born, the first ever ETF, which is called the SPIDER, which stands for S&P Depository Receipts.
The ticker are so important when it comes to ETFs.
Yes. So I just want people to know that makes ETFs slightly different than like derivatives, which are, you have a counterparty risk there. I mean, people put collateral up, but this is like derivatives, but they're physically backed. And that's why they're so popular. And that's also why the price stays close to the NAV, which you didn't have in Grayscale. Because at any given moment, if the receipts are trading at a higher price than the soybean oil itself, somebody's going to arbitrage that, because you can always it's fungible. You can always take the receipts in for soybean and vice versa. So because it's a two-way street, arbitrage can happen, and it does, and it's good. And so you have the price of the ETF right on top of the NAV. And not to mention all that, but the ETFs tend to be cheap, because this is an industry where Vanguard and BlackRock are like rule, and they're all real cheap. So everybody has to get cheap to compete with them. They're liquid, right? These receipts trade on the stock exchange, just like shares of Microsoft. And so iBit trades $1 billion a day regularly. That's a lot. And they're regulatory backed. So when you think about even an exchange like Coinbase, which has some regulations because it's a stock that's listed, ETFs are regulated through the 1933 Act and 1940 Act, and these are pretty rigorous. You saw how long it took for them to get through the SEC, and each prospectus is like 100 pages long with all these things that you need to make the system not fragile. And so this is why I think they're actually stronger than tokens in sense of like just having something quick you can trade. So you got the regulatory backing, the cheap price, high liquidity, and the brand names, powerful.
Yeah, 100% right. Let me just get in some of my hard question, right? So Bitcoin is all about decentralization, right? It's all about empowering people. It's all about you have the opportunity to own money. If we think about ETFs, this kind of like we are getting into the centralization of Bitcoin holdings, because that's what is kind of happening. So is that kind of against the nature of Bitcoin? Are we heading into a situation of centralized Bitcoin, and how that is actually going to be embraced by the Bitcoin community and by the crypto community that really loves the idea of decentralization?
So I'm ready to answer that. And when I was tweeting about this, I met a lot of people on Twitter who are crypto Twitter people, and there was some that had some concern. I could feel the spiritual tension between, hey, BlackRock's good because it'll help them, the price go up. But do we really want to give all this Bitcoin to like Larry Fink? That was the sort of dilemma I could see. Larry Fink's the CEO of BlackRock. I guess I want to ask you a question first. Would you consider Coinbase and the exchanges to be centralized or decentralized?
No, Coinbase is centralized.
Yeah, so I would say the ETFs are similar. If you have a problem with the exchanges, you're probably going to have a problem with the ETFs. They're the same thing. They're just way to outsource something. I mean, people outsource stuff all the time, right? We hire Uber because we don't want to walk someplace or drive and park. It's a lot of friction to get in your car and drive and park. I'll just call an Uber, right? Similar, you could go get the Bitcoin yourself and have a wallet, but given the steps you have to take, a lot of people are like, you know what? I'll just use an exchange or an ETF. So I think it's pretty normal. Like in terms of other markets, like stocks trade on an exchange, right? Instead of like off exchange most of the time. ETFs are a part of that. So a lot of this is just like in any business, if you can make something convenient for somebody, you're probably going to get some customers. So I would just look around you and just think like how many times do you like to just click a button and have something happen versus do it yourself? And I think most Bitcoin people would be like, yeah, there's a lot of things I like to do that with, where I just click a button and don't have to deal with all the friction of this thing that you could do on your own. That's the same thing with an ETF, same thing with an exchange. Now, the question that I think the heart of the matter is this: if the government were to confiscate Bitcoin, it would probably have compliance with BlackRock and Fidelity, who would probably hand over the Bitcoin. I mean, it would be a national scandal, and I get that. But FDR did confiscate gold back in the 20s. And so if you are that into this, where you're worried about the government confiscating it, I would not use the ETF. I would be safer and just get the Bitcoin to be decentralized. Now, all that said, the people buying the ETF, I don't think they're buying it to have a currency that they can use if, there's like all hell breaks loose and society collapses. I think what they're doing is they're buying a hedge to the dollar, because the dollar gets abused by governments their currencies get abused by governments all over the world. The US actually isn't that bad. Other countries are worse. But in the US, the dollar purchasing power has declined a lot. So I think a lot of people buying it are like, well, my real return in stocks is actually not that good compared to what it looks like on the screen, right? Because the dollar has been inflated. So when you are buying Bitcoin, I just think you're buying it for that portfolio construction purpose, as well as maybe you like to speculate. You think there's some smart people in the space. You're interested in technology, you don't totally get it, and you're not ready to go all the way and be like Mr. Decentralized, but you do want a piece of the action. So I think those are all appropriate ways to get involved without, I just think, like I said, the ETFs didn't invent that. I think the exchanges kind of invented that intermediary area. The ETFs, if anything, are just another intermediary.
So tell me, how do you think this is going to evolve between the growth of ETFs, right? There might be more ETFs coming up, and we can talk about that later, and then the role of exchanges. So how also are they going to reinvent themselves? That's also another question, if there's going to be so much pressure on them.
Elaborate a little bit there. Pressure from who?
Pressure from, if you need to get exposure to crypto, right? There was a time where the best option was to buy a Bitcoin miner. That was, the early days. Or obviously buy cryptocurrency yourself and then store them and take all the kind of like risks. Then obviously we got Coinbase listing in the US, so you could actually get exposure to crypto also buying a Coinbase share, right? And now you have got ETFs. So if you are an institutional investor, obviously like you said, if the ETFs are very convenient for you because they're safe, they're regulated, they get a piece of the action, but that is putting pressure on exchanges like what we said. So for example, a business like Coinbase is going to have some pressure from those ETFs as well. So you kind of need to think how to evolve as well. So as the ETF market is growing, what do you think is going to happen to Coinbase, for example, that is the exchange listed on the stock market?
Yeah, so it's complicated, I guess. Coinbase is probably going to lose some market share from ETFs. It's only natural. ETFs are market share stealers. They're very disruptive. That was my whole point in Lugano, which was that Bitcoin is a disruptive technology, but hey, so are ETFs. They're actually a powerful combination, and ETFs are just they're going to disrupt some of the exchanges for sure. Coinbase though is the custodian, and they make a good amount of money custodying the ETF, the Bitcoin, and so Coinbase, I think early short term benefited from the ETFs, but medium long term, I don't know. I'd be a little worried if I was there because what is it? What's the commission to trade on Coinbase? Like I've seen like a good deal would be 30 basis points for a trade or something but the bad deal would be like 1.5%. Like maybe the numbers are different. I haven't looked at them lately, but an ETF is 1 basis point to trade. So just to give you an idea of like the level of leanness and meanness of the ETF industry. I call the industry the Terror Dome because to launch an ETF here is brutal. It's hell for issuers, but heaven for investors. And that's why all the money comes here. ETFs are going to take close to $1 trillion in this year across all asset classes. So this is what they do. And they're, continue to disrupt in other areas. Bitcoin is just one of them. So I think that's what's going to play out here. But remember, there's always going to be a large amount of Bitcoin that's held by people and even governments and stuff like that are like, decentralized. So it can't ever grow to take over everything, I think. But there's a couple milestones coming up that are kind of interesting. I think the US spot ETFs have just crossed 1 million Bitcoin held, right? And that's a lot. And they're going to pass Satoshi, who has 1.1 million, according to the sources I look at, probably by Thanksgiving or Christmas, somewhere in there, the holidays. And then next year, probably by the end of 2025, next Christmas, BlackRock alone might own more than Satoshi. So you're going to have, a bunch of ETF issuers between 300,000 and like 1.5 million Bitcoin. They'll probably end up owning like 10 to 15%. Right now they're at 5. I'm not sure they go beyond that. We'll have to see. But I could see it playing out like that. To give you some perspective, so the US spot ETFs own 5 to 6% of all the Bitcoin right now. In equities, the ETFs own 8% to 9% of the stocks. In bonds, ETFs own 4%. And in gold, they only own 1% of the gold above ground. So at 5-6%, they're already more impactful than every other asset class except for equities. But US ETFs have been around for 30 years tracking equities. took them 30 years to get to 8, 9%. So to be at 5, 6% within a year is crazy. So I do see that number. It's just on a real quick growth trajectory. So as I said to Logano, whether you like TradFi or not, whether you like the ETF or not, we are married. We are going to have to get along because these ETFs are going to have a bigger impact on your asset class than any other asset class. And for better or worse, it is what it is. And so I try to get them to see that when it comes to Wall Street, they don't like ETFs either. ETFs do not really make money for Wall Street. So I was trying to say, like, there's some spiritual similarities here between Bitcoin and ETFs, I think. So I wouldn't look at them as straight TradFi the way I would look at some other things.
Do you have some kind of price prediction? Where do you think Bitcoin is going to get in this cycle?
I don't do price. I can't. It's like we don't give recommendations.
Yeah, sure, but kind
What
of like what you think we are in the trajectory. I know, there are US election basically
Yeah,
now.
that's a biggie. Look, here's what I'll put. I can't say my price prediction, and plus, I'll just be honest with you. I just don't know. What I do know is this: advisors. These are the people who wear khakis. Generally speaking, not all of them, but they're like 50 to 70 years old. They go golfing and they manage 30 to 40 trillion dollars of like boomer assets. They tell the boomers what to invest in, their taxes, estate planning. These financial advisors they move in herds a little bit. So as they start seeing other ones go into the Bitcoin ETFs, we've already seen, iBit alone has 115 advisors already that own it. It might be more than that. And that number equals 2 billion. So if you got that number within a year, you'll see that they're going to be more adoption from the advisor world. That's the biggest market here. Institutions, which are large asset owners like pensions, endowments, they may allocate a little bit. I don't see them going, as crazy, and I don't see as many of them buying it. So I just think long term, as the financial advisors herd themselves into having a couple percentage allocation to Bitcoin, some will never do it, but generally speaking, I can see some traction right now. And when you have people like BlackRock who have really professional salespeople who speak fluent boomerese, that's the thing. When you as powerful as like someone like Michael Saylor is and other investors of Bitcoin, I'm not sure they're going to connect as well with the sort of conservative boomer 60-40 investor as some of the BlackRock wholesale people. And so I just think that's powerful that these people are going to put the Bitcoin message into a palatable format and message to the advisors. And I just don't see how that doesn't help the price. I mean, do you know what I mean? That is what I would stay laser focused on. Whether there's flows this week and the price goes down and there's outflows, price goes up. Some of these people are focusing on day to day, week to week. Just relax. Just look at the big picture. It's up over 100% and change since the ETF kind of came into the radar. And it erased all the damage SBF did in price and in reputation, I think. I think the ETF sort of legitimized Bitcoin in a way that SBF had delegitimized it. So I would look at that and just extrapolate forward a bit. But something like the election, if there's some variable here that's a surprise, or equities have a big sell-off. Bitcoin and equities tend to move together. If there's a huge stock market sell-off for a couple months, I would brace yourself. It's not going to be like a perfect climb up. I refer to it as 2 steps forward, 1 step back, whether that's the price or the flows. It seems to be a statement that comes true over and over. But I would just think about the wholesalers, their smooth, polished ability to communicate a sales pitch, and the fact that they want to get assets in these ETFs. That's the most important thing to think about, in my opinion, if you're a Bitcoin person.
How much allocation to Bitcoin? We are now talking about having an investment portfolio. We used to say like up to 5%. That was kind of like the initial idea. I think with this ecosystem moving forward, with the ETFs, probably we are looking at a bigger number. What you think we are looking on right now?
I actually think 1 to 5% is probably good. But remember, 1% of $30 trillion is $300 billion. So even if half of them do 1%, you're looking at 150 billion. But I would say you're going to have some that do 2-3%. So that's why I think you could look at a tripling from 70 billion, right, into about 200 billion over time. The other thing I look at is gold. Gold ETFs have, I think last time I checked, like 140 billion, like about double what Bitcoin has. And, gold's been around for a while. People do like gold to a degree. But I think Bitcoin has a more powerful sales pitch because gold doesn't move a lot. Like it's a little more less volatile. I think the volatility is a feature, not a bug, because a lot of these 60-40 advisors portfolios are very, very functional. They've got cheap index funds in the core, and they know they got to wait 30 years for that to compound. So it's great. It's a great way to invest, in my opinion, but it's boring. So they actually look for a little excitement, a little speculative action. So I think Bitcoin actually kind of checks two boxes at once. It's a store of value, dollar hedge, plus it's got this, it's like this youthful gold where it's more volatile. And that, to me, fits perfectly in what I call the hot sauce bucket. And there's definitely a market for ETF hot sauce. I've seen it because there's flows and other stuff that's not Bitcoin that's very volatile. So I just think like it's got this other appeal, and that's why I could see it surpassing gold, but do I see it like becoming like 15-30% of the ETF? No. Or a person's portfolio? No. I think there might be a couple people who go down the Bitcoin rabbit hole, read all this stuff and go, wait a second, I've got to go all in. Like that is definitely a moment that goes off with some people. I understand it. I get it. But you have to understand a lot of these people have been trained for decades to believe, and it is true, and this is something the Bitcoin people miss. A stock works for you, right? Because you invested in Microsoft. It's not like you're just investing in a piece of paper and you're hoping somebody pays more for it than what you bought. Even if there's no speculative return, it just stays straight. Microsoft employees get up every day. They make new products. They sell old products. They create value. That is passed on to you in terms of like new cash flow via dividends. So you can get a dividend check and the price is still. So stocks pay you while you sit there. Now, on top of that, if people buy it, it goes up also. So there's speculative return, but there's also this basic investment return. And I think the crypto people miss that. I would not invest in stocks. I think and bonds have a coupon. They literally give you a coupon payment. Now, some Bitcoin people are like, the dollar is devaluating so much that the real returns on all of that will be nothing. And if you go that far, and maybe some people will, they would then abandon the 60-40. I asked somebody, I tweeted the other day, I was like, you clearly can get orange pilled, but can you get 60-40 pilled if you're a Bitcoin person? And they said you can't go the other direction. But I really, honestly, I think maybe if some people get more, I don't know, let's say they get a mortgage, their life expands and they just want a diversified group of investments, maybe they will. But I say that mostly, just to put it out there that it's going to be hard to get a 60-40 person to forget everything I just said and go, yeah, let me go all in on what is effectively a commodity.
I think it's very interesting what you said, because it's like a shift of paradigm. And, investing has always been about diversify your portfolio, don't put all your eggs in one basket, kind of a hedge. So basically what you're saying is more about Bitcoin is going to still be between the 1% and 5% portfolio allocation, but there will be more and more advisors coming into the space, so that will add basically more investors. But maybe the next generation want to bet only on one thing. Who knows? But I do agree with you. We are still, the money here, they are kind of still the big part of the markets is the boomer money, right? And those are all managed by those advisors.
Yeah, so we actually have the boomers, if you look at the stock market and who owns it by generation, the boomers and people older own 70% of the stock market. Yeah, Gen X, millennials and below own 30, and millennials and below own like 5. I mean, I'm Gen X, so we're not bad. I think we're like 15 or something. But you're right, as the boomers pass on that wealth, you could see a bigger allocation. I don't doubt it, but these boomers are good at living, so it could play out. It's not going to like all happen in one shot. I think that over time you could be right. I don't know.
100%. So listen, the last question I wanted to ask you is about, different type of ETFs. Obviously, I was also reading your book where you specifically said that ETFs are all about creating product that investors ask for. Right? So it's all about that. And investors were looking for a way to invest in Bitcoin. And that's how, we got the Spot Bitcoin ETFs. What's happened now? What investors want to invest in? What product you think, they would like to get exposures? There are different type of digital assets right now. Tell me what you think.
Yeah, so when it comes to the digital asset space, the Ether ETFs were kind of a flop. I actually predicted that. And they're XRP and Solana. If Trump wins and puts in a more libertarian SEC chief, it's possible those get approved. But if you look overseas, 21 Shares has a bunch of this stuff already in ETF format. You could do it. It's possible. I just think in the US, just like gold, I think gold has 90% market share of all the precious metals. I think Bitcoin's going to be like that. So I think there'll be some stuff at the margins, at the fringes for the digital assets, but I think the fact that the Spot Bitcoin ETFs are here, that's the main attraction. And just, I would focus on that. That said, there is one of the big stories coming up for us that is, I don't know if it's related, maybe it could be a little, is private assets. So like private equity and private credit, like ETFs tend to not be able to hold anything that's private. But there's a couple ETFs trying to team up with private equity companies to make something illiquid liquid. And so the ETFization of private assets is the next big sort of holy grail. I think Bitcoin was a holy grail for a couple of years there. We tracked it the whole time. And now we see the horse race. It's about a year old. We can see what's going on. It's hugely successful. The next big one is private assets. Not to say that digital is going to stop. They're going to keep, I just think Bitcoin is going to take 90% of the money. So I wouldn't look for anything that crazy or interesting or powerful to come in that space. Tokenization comes up sometimes, like you can tokenize this and that. But here's the thing, like tokenization, remember in ETF, I can go to this computer here, I can type in my Schwab account, I can hit buy, and I'm done. And I immediately own this thing. I pay almost no fee. That is a frictionless, almost no cost event. I just don't see what you're disrupting there with tokens. Tokens also don't have what ETFs have, which is this sort of regulatory backing. I'm not sure I could see the SEC approving tokens for all this stuff under these regulated 1940 and 1933 acts. Like the way they do with ETFs. ETFs, like you need an independent board, you got to have an administrator. Now, I do think in the back office of the way the fund industry works, maybe some blockchain could actually help streamline some of that. But at the end of the day, people in the US for sure they want someone to call if something goes wrong. They want something like a regulated thing. That's why the ETFs are so powerful, is because they've got all this it is no friction, no cost, but the regulatory backing that makes them feel good with the prospectus and everything. So I'm not really I mean, I have to see more from tokens to see. I think money market mutual funds, which are clunky, those have been tokenized, and I could see tokens like finding some things that aren't as frictionless as ETFs and going after them. So that's something to watch too.
Eric, thank you so much for coming on the show.
Thank you for having me.